Good afternoon, ladies and gentlemen. Thank you so much for joining us for the town hall. We have about 19 participants. We'll wait a little bit just for a few more participants. In a minute or two, we'll be starting. Kindly mute your mic. Mute your mic and switch off your camera. Thank you. Good afternoon once again, ladies and gentlemen. Welcome to today's town hall. I'm your host for today. My name is Tali Mwala Mungala from the Securities and Exchange Commission. Our topic today is an interesting one. As you may all be aware, on the 23rd of February, 2023, which is this year, last month, the Minister of Finance and National Planning launched the Capital Markets Master Plan. So today we're going to have our CEO, Mr. Phillip Chitalu, to just take us through the master plan. He'll give the regulators perspective on what this plan is about and what it's about and what it means to the Zambian people. So before I allow Mr. Chitalu to just go ahead with his presentation, just a few housekeeping rules. Firstly, raise your hands if you want to make a comment or question, but the questions will be admitted at the end of the presentation. And keep your mics muted and your cameras also off. Okay. So I'd like to just call upon the CEO, Mr. Chitalu, to start our presentation today. Mr. Chitalu, can you hear me?
Apologies, the usual excuse, muted. Let me just see. Tell me if you can see the.
We can see your presentation. Just put it in.
Gonna have a few kind of stuff in there because it's coming from youngsters. Good afternoon, everyone. My name is Phillip Chitalu, as introduced. I'll spend a couple of minutes just going through our thoughts around the capital markets master plan, what it is, and things like that, so that we can all be up to speed with what is happening in the capital markets. Although we have 7 discussion areas, some of these could actually be similar, and we'll try to see how we can rationalize so that we spend maybe more time in terms of asking questions and the commission. I'm joined in with a number of my colleagues from the SEC, so they should be able to help me answer some of the questions that will be asked. I think the biggest question is, Sitali, I hope I'm loud and clear.
Yes, you are, though we lost you for a bit.
Oh my God, don't tell me. But how is it now?
Connection. It's better now.
How many minutes do I have?
Okay, so the time is 15:08. You have 40 minutes to make your presentation, after which we'll take questions and any other interactions from the public.
Okay, yeah. You know, in looking at the topic of discussion this time around, we're really talking about capital markets master plan. I think we cannot really start talking about planning without knowing what it is that we are planning to do about. And the biggest thing that we really are trying to do as a country, because this is not a SEC activity, but the national activity, it's about economic activities. So everything else that we are going to talk about today should somehow get into economic activities. What are we trying to do? Are we trying to get funding into the government activities? Are we trying to get funding into infrastructure such as electricity generation, water pumping, roads, which is connectivity? Are we trying to build other stuff like real estate? Or is it just mere business funding? So whatever we do in the capital markets, it's about the bottom area there, which is economic activity. So how do we actually get to do this? We get to do this through a number of products, and those products could be either public or private. And I think where we have securities there, that should be public markets. And then we've got, of course, things like corporate debt markets. And debt markets could actually be further split into a number of areas, including what we've come to now know as the green bonds, which is really just part of a fixed income security. And then the broader categories are fixed income, either equities or fixed income securities, like I said. So in terms of our presentation and everything else that we are going to talk about, really, remember this, it's about economic activity. How do we actually get to speak into this? Economic activity, you know that the country gets to plan economic activity around now every 8 years. So we have the 8th National Development Plan, of course. And then we've got a Vision 2030 of attaining a number of those items. And the capital markets plan cannot be seen in isolation, in the sense that it is just a tool, like I said in the beginning, it's just a tool towards meeting economic activities, some of which is enshrined or included within the various number of economic development plans, such as the need to create jobs, reduce poverty, conducive environments through those kind of things. This is just a preamble of what it is that we're planning to do. So the question is, what is this capital markets master plan that is needed to drive the various economic agenda, and the why? What are we really trying to do as a market? As you will let us get to see, you usually get to plan or change your plans because of something that has happened. So what do we hope to achieve through the capital markets master plan? So things like getting efficient markets is key to driving economic activity. And of course, we have a number of investors that get to supply the funds through their savings into these economic activities. So they need investor protection. And that's what the SEC gets to do. And of course, we have within the capital markets master plan issues of a developmental nature. And this development is now specific to the development of this particular financial sector. And how do we do this? In order to access long-term funding, in order to access the long-term funding that we're talking about, we need an efficient market. We need the investors to be protected. We need the development of new products, such as the green bonds, which we'll be speaking to later, that go to specific economic activities. And of course, like we've talked about again and again, funding from our perspective is not restricted or is not an end in itself. We work as an enabler towards economic activity. Economic activity results in the growth of GDP. I saw some numbers, I think from our statistics colleagues, that the economy could have grown by something like 5.4%. That's welcome. And economic growth certainly goes into economic development. Now, I always get confused about the differences between economic growth and economic development. I'm sure economists who are on the call would speak into this better. That's why we have to put a job there. I think that's part of economic development. You have jobs, and people with jobs get a salary. A salary can pay for school fees, your health bills, and holidays and all these other things. That's economic development. So you again get to see that what we do at the Commission, at the Securities and Exchange Commission, is really as acting as an enabler towards economic development. But we cannot really go into discussing all these developmental issues, including what it is that we want to do in the market, without bringing to the fore the challenges that we have had, the observations, or where we are as a market. So if you're looking at the development of the financial sector in Zambia, you get to see that over 60% of our adult population, and I'm made to believe that if you look at the census, the last census, I think adult population is something like 6.8 million people. So about 60% of the 6.8 million people have a bank kind of transaction. Either you have a bank account or you do something with the bank. So out of that, you actually get to see that the banks themselves have assets in the billions of kwacha. And as at 31st December, this is data from the central bank, they're about 196 billion bank assets were in existence. The next segment is the pensions and insurance sectors. So this sector is the second largest within the three-sector financial services sector. So about 16% of adult population have pension funds into, they are either expecting or they are contributing towards their pension. So we have about 80 billion of pension funds, and that's inclusive of NAPSA. And our population, again, we're talking about adult population, about 16% of that 6.8 million people are members of a particular pension fund, either NAPSA or the private pension funds. And then you get to see, and maybe this is why we are talking about this, the smallest segment of the financial services sector is the capital markets. We are just at about 4.75% of adult population, or about 322,000 people have or do get to save through the capital markets. And this equates to something like 75 billion. That is inclusive of the 22 listed companies, or 43 billion if you were to exclude Shoprite. Shoprite is one of the biggest assets that we have on the listing. Now, sometimes we get to exclude it so that we can actually see the value of assets that are mostly located in Zambia and their contribution towards the GDP. Now, we deliberately put this like capital markets is part of the pension funds and is part of the money markets. It's actually maybe more or less like a union than anything else, in the sense that some of the savings that you get to see in the capital markets actually comes from the pension funds. If we were to disaggregate the data, I think we may have a totally different picture, in the sense that a particular percentage of the 75 billion is actually coming from the pension fund assets. For instance, your NAPSA invests in almost quite a number, over 90% of the 22 listed companies. NAPSA has a stake in there. So some of that money comes into that. And then you also find that some of the NAPSA funds are in the money market. So part of the 196 billion, if we were to actually trace all this money, maybe your final picture, I think it's a challenge to the market and to ourselves, your final picture may not necessarily be 196 billion plus 80 plus 75, because some of these could be double counted depending on where you're looking at. So this is where we're coming from. And we're trying to say, if this is the local scene, what do we want to see? But before we go into there, let's see the next slide. Comparison with some of the markets within the region. Of course, the giant, even in banking and insurance and pensions, is South Africa, way above ourselves. And some of the data that we have around there is equity market capitalization. If you recall, I was talking about in the previous slide, the need to move out, for instance, Shoprite, so that we can see the real Zambian assets that are listed on the market. Zambia is at about $4.2 billion, and I see the number there for South Africa. Despite our economy being bigger than Botswana and Mauritius, this is a fact you can check. I don't know where we are now, but at the time we were picking up most of this data, Zambia's economy in terms of GDP was far bigger than some of these markets. But again, when we come to the number of listed companies, if you go to the right side top quadrant there, you see that whilst our economy could be big, we only have something like 22 listed companies compared to Botswana's 30. Mauritius has 194 listed companies. In South Africa, they've got over 300 companies listed. And our neighbor Zimbabwe had 59 listed companies. So in terms of the comparison of the size of our market to GDP, you get to see that we are just about, apologies, that should have been, okay, it says ratio. We are used to using percentages. So in terms of Zambia, we are at 16%. Botswana, they are at almost 178%. Mauritius at 76%. South Africa, way above, which means most of their companies on the market, the 300 companies, the value of the 300 companies compared to GDP is way above. Zimbabwe at 23%. So you get to see that, again, we do not perform so well. In terms of liquidity, this is where of the 23 counters on the market, or the 22, how much or how many shares actually get to exchange hands. So this is where we get to see equity value traded compared to market cap. Basically, you're trying to say that value, the $4.2 billion on top there, how much of this trades in a year, for instance? A paltry 0.4% for Zambia, and you get to see that in South Africa, for instance, almost 8% of the $1,214 billion gets to trade. Now, why do we get to talk about that? That's the only way you can measure how actively traded the securities are, how efficient is the market, because if you want to attract long-term funds, you have to assure people that when they get in at whatever level and for whatever kind of duration, they can easily sell their stake in order to go and do something else. Without having attractive equity value traded to market cap, it becomes very difficult to attract new savings, especially savings from abroad. So these are the developmental issues that we have. if you can see what we're talking about in terms of GDP, market cap, number of listed companies, market capitalization, of course, and of course, the value that is trading on our market. So now we have laid, I think, a good foundation into why Minister had to launch the country's policy or strategic development plan for the capital markets because of the size, because of the liquidity, because of the few listed companies. It becomes impossible to grow the economy from the private sector or a private sector led economy. It becomes very difficult. So in order to try to resolve the challenges, the country had to come up with a 10-year development master plan. And this is what we're talking about, so that we can increase our economic activity like we did show in the area slides. So this CMMP set out basically it's a roadmap. And this roadmap has got road marks, and some of these positions include our goal to see that Zambia becomes a preferred destination for investment. And of course, the capital markets master plan has a number of strategies aimed at addressing the challenges that we were talking about a few minutes ago. And of course, one of the challenges is to ensure that we have an enabling and attractive investment environment. Remember, capital flows where there are a number of markers that are needed to be in place for somebody to be attracted to it. For instance, stability in the economy, exchange rates, inflation, and all these factors become a very important and key aspect if you need to spur the development of markets in Zambia. So in terms of numbers, so that we just don't appear to be speaking from without, the master plan had to come up with key deliverable statistics or numbers that we aim to do. Remember, we talked about the starting point. We did speak about the 16% of our market capitalization to GDP ratio. We want to grow all the way up to 33%. That's the ambition that we have as a market. And of course, in the short term, we want to see if we can grow from 16 to 27%, medium term 30%. And how do we get to do this? Of course, if the GDP, the market cap to GDP ratio has to go up, it's either the listed companies grow or we increase the number of listed companies. So it becomes easier to increase, attract a few more companies to list so that we can move from 23 to 27, 33, and within the 10-year master plan, we get to 40 listed companies. Remember that Zimbabwe has 59. So whilst we are trying to go up to 40, which will be almost 100% growth from 22, 23, we will have grown by 100%, but we'll still not beat some of the competition. And because now you have 40 companies, and the size of this company is estimated at a total market capitalization of 23 billion. But to attract the number of companies to list, like I said before, we still need to work on the turnover ratios, like I said. If we can grow the turnover even to 6 or 8, we'll be very, very close. We'll be very, very close to what is being achieved in, for instance, in South Africa. And then we need to work on the development pipeline. And some of these are purely new projects that may add on to the numbers that we're talking about. How do we get 23 to 40 we need to have a pipeline. So that's another milestone or KPIs that are being looked into. And then we have a number of exciting areas where we strongly believe that we can easily score something within the shortest possible time. These are green bonds. I think you've heard so many people talk about green bonds. Zambia has potential, like we always say, we have a lot of potential to attract green finance through the issuance of green bonds. Now, like I said, a bond is a bond, but a green bond has the use of proceeds specified within the issuing documents so that the money goes into environmentally friendly type of projects, like for argument's sake, like solar, which is probably environmental neutral, maybe a forest, if you can justify that I'm planting trees in an area that never had trees, that's probably a green project. I have a team of very exciting individuals on call today who are specialized in some of these developmental areas. And of course, one growth area is mutual funds, or as we commonly call them in Zambia here, collective investment schemes. So we hope to grow collective investment schemes from the current $68 million all the way to $250 million. It sounds like a lot, but again, if you compare to the region, if you compare ourselves to the region, that's a very small quantum. But in terms of ourselves, we would have probably grown by 4 times, which is quite wow. In addition to the green bonds, we are desirous of ensuring that exchange-traded funds are also listed. And my colleagues will be on hand to explain what some of these interesting funds are. We are looking at growing the real estate investment trust. We actually had a meeting with one of the financial institutions in the morning. They're looking to see if they could come into this space. Now, a REIT is basically the one that we hope to start with is called an income REIT, which is an income real estate investment trust. Basically, this is a trust that gets to hold real estate assets, and then the people holding on to the units in the REIT would be able to share the profits, as it were. It's got very interesting features in the sense that if you're a small pension fund, you do not need to do a more all the way up to occupation all by yourself. That's too much risk. You can actually team up with other smaller pension funds and create a REIT where each one of you would hold a percentage. In the long term, we want to see that within the 10 years, that would have done something like $20 million. Now, one of if I were to go back, one of those attributes or KPIs that we have for ourselves is, of course, this Morgan Stanley Capital International. For you to be able to do some of these things that we're talking about, you need to get into that club. And that club ensures that every time people see that you're a member of that club, it becomes easier to attract and do some of these things that we are that we're doing. So our perspective as a regulator with respect to the plan that Minister launched is doable. And with your help, the whole market working together, we should be able to achieve market accessibility, for instance. We need to grow the market, the size and liquidity ratios, like we've said. And of course, it's very important that the market begins to positively contribute to economic development. In terms of the number of listed companies, like I said, whilst we acknowledge that Zambia has a low number of listings, I think as a market, there are a number of areas, like we said before, that could be done in order to increase this low activity. And it starts with pulling together in one direction and ensuring that we get to implement this master plan. The increased number of listings is envisaged to also provide some efficiency levels, in the sense that one of the biggest issues that keeps coming on the market is this lack of diversity of listed securities. And sometimes, for instance, pension funds would say, so if I sell this particular stock X, does the market have alternatives where I can take my money else? And how transparent is the market in terms of pricing? So these are some of the things that the number of working groups that will be created will be looking into, so that we can together develop the market. This is not a SEC act alone, but this is a market issue. I've already preempted you in terms of our regulatory oversight, and I may spend a bit of time here. We've actually spent quite a bit of time in trying to see where else we can actually grow the market with respect to non-traditional listing areas, if you like. Now, like I said, I think Zambia is endowed with a sizable proportion of labor force, and most of these are involved in agriculture. So climate financing becomes a key area that we can look at in terms of attracting other people's savings towards this economic activity. I never really used to understand all the fuss about this, but look at it this way. If the majority of Zambians are involved in agriculture, if we have droughts, if we run out of water, that means a good part of our workforce will not have jobs, because then the farms dry up, and then there's no land to cultivate anymore. Can you imagine? Over probably 25% of the workforce, if we do not engage in sustainable agricultural practices, will not have jobs. That will certainly negative impact on our economy, and we don't want to see that. So capital markets can be used to obtain climate-related funding, like you said, which could actually go towards economic growth. So we are very, very keen in developing sustainable funding solutions. In fact, with our partners, we are creating a unit within the SEC that will be looking into these sustainability issues. And we've been privileged that one of our partners, Biofin, has actually recruited a resource that will be helping us to ensure that we grow this particular focus area, and see to it that before too long, Zambia could actually issue the first green bond. We are also keen to ensure that what we're talking about today is just not talk. So internally, again, we have a resource that will be given the responsibility of ensuring that the capital markets plan does not just remain on our shelves, but it is implemented. These individuals are responsible to ensure that on a daily basis, whenever they show up here, They are following up on the KPIs, they're following up on the activities, they are following up with our other partners to see to it that the capital markets master plan becomes a reality, including all these things that we're talking about. So our role is to be secretarial, to drive this agenda, but your role as a market is to help us achieve this country strategic objective of growing the capital markets and ensuring that, like we saw in the first slide, that the country attracted enough funding towards the desired areas, including agriculture, sustainable generation of electricity, sustainable buildings, sustainable other activities, so that we do not only get to fund activities now, but we get to fund activities that support Zambia in the longer term. So we did not want to bore you a lot, but we just wanted to show you how serious we are with respect to capital markets. We should have about 19 minutes now left for a Q&A, and I hope we have a very, very interactive kind of session so that we can get your perspective towards this capital markets master plan. But before we allow questions, Chitalu, I just wanted to assure people that this is not, the capital markets master plan has not only been done in Zambia. Actually, we are lagging behind. Countries such as Malaysia, Nigeria, Kenya, I think Rwanda, Uganda have successfully used this type of planning to promote their markets. And some of them, the results, positive results, are starting to emerge. For instance, we are aware, looking at the statistics, that whilst our government bond secondary market trade is only like 0.5 times or 50%, in Uganda, they trade as much as 1.8 times, or that is like 180% of outstanding government bonds. Nigeria has reached about the same level. But our favorite comparator, although outside of Africa, but who have been implementing capital markets growth plans, is Malaysia. They are thinking to their third such plan. They're able to trade as much as 9 times or 900% of issued capital, of issued government bonds, which is a lot of liquidity. I hope by the end of 10 years, it is our prayer that the market works with us and we help government achieve its aspirations. Chitalu, I hope I've stuck within the minutes. Back over to you.
Okay, thank you so much, Mr. Chitalu, for that wonderful presentation. Indeed, let's talk capital markets reloaded, and we have a good document, the CMMP, to help us advance our capital markets to a different level. We'll now open the floor for questions. You can use the chat function, or you can simply raise your hand and you'll be given the platform to speak. I must also mention we are live on Facebook. So our Facebook viewers, you're also free to make your comments. We'll read them through and they will be addressed here. Any questions? Anyone with a comment? Please raise your hand. Okay, we have a comment. This is from Zach. He's asking whether would these cover, just a minute, would these green bonds cover biogas as well? Mr. Chitalu?
Is Tumboy on the call? I would rather leave it to the green guys. Yes, as long as it can be crafted in a manner in which it is acceptable to the to start with our guidelines, the green bonds guidelines, and internationally accepted standards. Anything that meets the criteria can be green. It's not just restricted to forests and trees and everything else. But if Mtumboy is on the call, she could probably provide a better explanation. Mtumboy? Or any of the team members?
Ms. Mundia, are you here?
Mtumboy she's in another meeting.
Oh, okay.
Yeah, but so in a nutshell, you tick the boxes, you meet the criteria, you use the funding towards the green project. Once it's certified green, anything can be green. It's not just the color, but it's the use of our process. It's about the environment.
Yes.
For instance, it could be recycling of waste. And because it provides a cleaner environment, it can be construed as a green project, and then you get funding. So there's another hand.
Yes, just to add, I think the CMMP does highlight any green-friendly or green-conscious areas. So I think it's not limited to what you deem as being maybe solar, but I think anything that is promoting biodiversity.
Thank you, Mbanga, for that. We have a hand from Zulu B. You can unmute your mic and go ahead and make your comment or question. Mr. Zulu, we see your hand. Please go ahead.
Hello, good afternoon, CEO, and good afternoon, SEC team. I hope I'm audible.
Yes, you are. Good afternoon.
Thank you very much. I wanted to take you to slide number 9, if I'm not mistaken. And I think that's where the CMMP's KPIs are. I think there is one line of interest for me. That should be line number 6, where it's talking about firms in development pipeline. I think it's saying by 2022, there is nothing. By 2024, there is 5 companies, and then the numbers start increasing thereafter. I wanted to find out what companies are, what this relates to. Is it with respect to companies being listed on the stock market? Because I think there are a number of products or services that are being planned for. For instance, towards the end of the KPIs, there are ETFs, and then there is also real estates, where it's stating that we don't expect to have anything. So with respect to firms in development pipeline, what do they relate to? I also wanted to find out if there is anything in the pipeline for green bonds thus far. Thank you.
Very exciting question. I'll leave it to the technical guys, but yes, it's a mixture of the KPIs and developmental areas that we have. But in principle, the pipeline should be able to assist us reach the listing criteria. But if you go into the master plan itself, we are talking both private and public markets. So the listing is a public kind of market thing, but raising of capital cannot only be restricted towards public markets. There's a lot of emphasis this time around towards private markets, especially with the realization that some of our companies may not actually qualify to be publicly listed. Over 90% of Zambian companies are actually SMEs. They may not be structured in a manner that could get them into raising funds from the public funds or public market, as it were, but they could still be put in a pipeline, cleaned up, and be made ready for the markets. Mwanga, you want to say something? Or Nonde, anybody else?
No, I think, CEO, you've addressed the query quite effectively, but it's basically pointing out to both public listings as well as private. So under the public, you're looking at your SOEs. How can they be made more efficient through leveraging capital markets as a source of finance? And also on the private side, how can the CMMP be leveraged, for instance, to further make the private sector more active and also broaden the participation of investors, both in institutional as well as retail, through the listings?
Thank you, Mbanga. Thank you, CEO. Mbanga, while I still have you on the floor, there is a question from Jordan Mbanga, who says, what type of companies are you planning to establish so as to reach the 40 companies that we've stated in the plan by 2031?
I think it relates to the same question.
To the same thing, yeah.
Okay. But maybe I can just come in. The commission is not an investment company. The commission is in a regulatory space to ensure that we have a developed, efficient market where private and public companies could actually raise funding. So in that respect, we are not going to be involved in the actual creation of companies, but we do get involved in the provision of rules and regulations that make it easier for particular developmental areas to thrive by ensuring that capital flows towards them. I think that's what we do. We do not provide capital as well. We provide the ground, a level playing field, or we provide a fertile ground in which ideas can flourish within the regulatory space. So we do not create companies and we do not provide capital.
Thank you for that clarification, CEO. We have another question concerning the green bonds. One is Simon Souza is asking, how accessible will the green bonds be to the public?
If I may answer that, it's like I said, green bonds are just bonds, except the money that is raised through such bonds goes to specific environmentally friendly projects. So we have had a number of bonds that have been issued on the market, and the public, depending on the structure of a particular bond, especially if it goes into the public market, can actually subscribe into green bonds. So depending on the issuer or depending on the person who wants to raise money, they could either maybe target pension funds, they do what they call a private placement, or they could do a similar activity like your initial public offering, where you offer to the public certain percentages of the green bonds. So in our understanding, but mind you, like we said, we provide the law, the actual final structure of each and every contractual listing depends on each and every kind of person coming to the market. So the public should be able to invest in a nutshell.
Okay, thank you for that, CEO. We have a couple of hands. We have one from Jordan Mubanga and then Phillip Ngongo. in that order. Mr. Mvanga, please go ahead with your question or contribution. Mr. Mvanga, you can unmute and make your contribution, or was your question addressed? Because I know you're the one who asked about the companies that we intend to establish by 2031. If that's the question, then it's been addressed. Then we can go to Mr. Phillip Ngongo. Okay, while we wait for the gentleman, we have another question in the chat. Are we likely to see an easing of regulations or reduced requirements for listing companies as part of the CMMP to achieve growth in IPOs? This is from Mr. Khan.
Maybe Mr. Khan could be more, give more maybe specific examples, which type of regulatory oversight. But then in a broad sense, yes, in the sense that I think one of the developmental areas, Muvanga, I want you to speak into it. One of the developmental areas is legal and regulatory development. So if that particular committee or subgroup identifies that the law is an impediment to the growth of the markets, then certainly we would change those particular provisions in the laws, regulations, and rules to ensure that we have a more friendlier kind of environment to raise capital. I think in a nutshell, that's what I can say, but it depends on which specific areas that we want to see better regulatory oversight.
Okay, thank you for that, CEO. I hope
Yes,
that answers your question, Mr. Khan.
I think just to dive deeper into the development area, part of the enhancing the capital market regulatory environment, I think one proposal is for the exchange to review and possibly adjust the listing requirements, which will obviously have to be benchmarked with other peer nations, among other. So I think that issue has been considered in the CMMP as well.
Okay, thank you for that, Mvanga. Okay, so Mr. Ngongo says he is not able to unmute his mic. I would advise you to type your question in the chat. We'll be able to address it from there. Are there any other questions and comments? Any other hands that have have seen? Mr. Ngongo, you can type your question so that it's addressed. Any other comments from the public? Questions, views? Okay. Mr. Ngongo's question is, have you considered looking into how Islamic community, how the Islamic community can be brought to capital markets?
Very, very good question and observation.
Yes, did you hear me?
Yes, we did. Yes, Italy, are you there? Or is it my link? Muvanga,
Yes, I'm
can
here.
you hear me?
No, the link is, we can hear you. Just I think our network is a bit weak. So the question was, have we considered looking into the Islamic community, how they can be brought to the capital market?
I think those are some of the discussions we'll be having as we look at specific developmental areas. Suffice to say, it's something that the Commission had started a couple of years ago. I think we need to further explore the potential and see to it that that community is brought in. I think we had even sent somebody all the way to Iran to study the Sukuk bonds. I think, I hope I'm pronouncing correctly. Because the biggest issue about Islamic community issue is interest. They do not allow products to have an interest component. It's more based on equity type of structure, where if somebody gives you money, you're probably going to share the losses and the profits, as opposed to such a product accruing interest. So it's a very, very good growth area, which the market should be able to look into as we look at a number of development areas. I'm sure my colleagues are noting this. Whilst we look at green bonds and other areas, this Sukuk and Islamic, general Islamic products are looked into as well.
Thank you so much, Mr. Chitalu. We have come to the end of our town hall today. We're right on time. It has been an interesting and interactive session. If there are any burning questions or comments, you're free to do so. Okay, Mr. Ngongo has got a follow-up question. Kindly speak to financial literacy and what you've packaged in the message, in the master plan. Sorry, I couldn't see the word. Okay, so he's asking to speak to Financial Literacy Week and what we've packaged in the master plan concerning financial literacy and financial education, I think.
Okay, another good question. What informed, I think, the beginning point of the capital markets master plan? One of the earliest findings that we had was awareness. And remember, we spoke into 322,000 people in capital markets, over 14% of adults in pensions, and of course, over 60% in banking. I think, as far as we're concerned, awareness is one of the challenges that we have. If more and more people were aware about, not only about the existence of capital markets, but what capital markets can do towards funding developmental agenda, such as the 8th National Development Plan, then we should be getting somewhere. So developmental areas, again, have been identified. And if we see that we need to spend more kwacha on awareness, and particular awareness, we will certainly do that as a market. But those are some of the ideas that we need as we start the implementation of the capital markets master plan. I hope I've answered the question.
Yes, CEO, thank you so much for that. Okay, so we have, we've posted the SEC website in the chat, just for you to be able to access the CMMP document. You'll be able to find the master plan there. There's another question saying, I would like to encourage an honest engagement with the current list. I would encourage an honest engagement with currently listed companies, some of which are looking to exit the exchange. There is a sense that the continuing obligations far outweigh the benefits of listing.
Sita, you want me to answer?
Yes, sir.
Or to comment? It's not a.
It's not a. It's a comment.
Yeah, but it's a very, very good.
Yes.
It's a very, very good comment, Mr. Nawa, I believe, and we should take that on board and see if we are looking to grow the numbers like we have tabled there to 40. Can we afford losing some, or the market should be able to look at the issue of if somebody wants to leave the market, then like you have put it, they find it more of a cost than a benefit. I was just looking at the New York Stock Exchange. Despite the issues between the US and China, there have been 20 new listings of Chinese companies on the New York Stock Exchange. Those are the questions, in my view, we should be asking ourselves and answering, like why? Why would be people running towards where there's a fire? There are a number of Chinese companies, this is public information. There are a number of Chinese companies that have been made to delist on the New York Stock Exchange, and yet more and more Chinese companies are running there. These are the questions we've been asking ourselves as to how efficient should our market be to such a level that we have a queue of people wanting to list versus a queue of people wanting to leave the market. I hope we can, yes, ask the genuine questions and get to see how best we can achieve that. One of the developmental areas is cause, it also looks at funding, which is easier to identify in the sense that no one wants to pay regulatory fees. But the question has always been, how can the market come up with an ingenious way of ensuring that regulatory services are paid for, but that regulatory fees do not negatively impact on the existence of companies? Those are some of the questions we'll be asking ourselves, and hopefully coming up with appropriate responses as a country towards developing our market. Very, very good observation, and I'm sure my colleagues have noted it. Thanks, Mr. Now.
Okay, thank you so much, CEO. Thank you everybody for participating in today's town hall. Thank you for your time. And as you have heard for yourselves, the CMMP document is out there for us, and it's a good document that's going to help us develop the capital markets here in Zambia and just help the nation to develop as a whole. I hope you can join us again next month, same time, same place, for another engaging topic at on the Securities and Exchange Town Hall. Thank you so much and have a good day.
Thank you, Stali, and thank you everyone for coming through.